Well, potential problems for the big banks. The fallout from the 2008 financial crisis, it is still not over. Cities can now sue the banks for the housing crisis. The Supreme Court handed down a landmark ruling stating that cities can sue banks for discriminatory mortgage lending practices. Now, the ruling stems from a lawsuit brought by the city of Miami, which sued Bank of America, Wells Fargo, and Citigroup in 2013, stating that the banks engaged in predatory lending to minority borrowers in the city. And the Supreme Court did caution that the burden of proof could be difficult to achieve. For more, we're joined by Chairman of the Collingwood Group, Tim Rood. Tim, good to have you with us.
Thanks, Michelle. Nice to see you.
So, Tim, what exactly are these cities claiming?
Well, it sounds like they're using basically the Fair Housing Act, which is to say that you've discriminated against borrowers in some form or fashion. Basically, you had a disparate treatment of these borrowers, and then that had a disparate impact ultimately on their outcome. In layman's terms, it just means that they use predatory practices for, generally minorities, low to moderate income home buyers. They charge them too much money is the allegation that ultimately resulted in this event, which was a foreclosure, which is a pretty darn hard thing to prove.
Well, let's talk about the predatory, because wouldn't that have to imply that the banks did something on purpose, that it targeted minorities intentionally?
Yeah, you would think so, but unfortunately, and you got to think about this in perspective, that the lenders have not gotten out of the penalty box for 10 years, that basically they've been sued by anybody and everybody, and the fact that now counties can sue them, is a bit of a head scratcher. But ultimately, what this means is that the predatory lending practices for these banks is not a new thing. It's actually been enforced by probably 7 different agencies. So the fact that the counties are now getting involved in it seems to be a little bit of overkill.
But in hindsight, and they're making the banks pay, and pay big. How much are they paying?
It's good business, I can tell you that. I mean, so you think about the Attorney General, the Department of Justice, they've sued these big banks for tens of billions of dollars. States have piled on, and they've also sued.
But Tim, no one forced these home buyers to buy a home. No one forced them to take out a mortgage. I mean, it's like saying you've got the drug user and the drug pusher. And yes, you can blame the drug pusher, being the banks in this example, but they wouldn't be pushing anything if the people didn't want to use the drugs in the first place. So, I mean, shouldn't there be some responsibility on behalf of the people that wanted to upgrade and wanted to take a mortgage and spend beyond their means? Yeah,
the challenge for the whole U.S. economy is what you found is that the U.S. really didn't have a stomach for defaults. They didn't let banks defaults. They didn't let borrowers default. They always, you really want to see is growth, right? The only way you're going to grow, you get out of a credit bubble is either growth or something like that. But they're clearly not allowing them to default, which has exacerbated and extended the housing crisis because you can't get out of it.
But at what point, I mean, do you take ownership and stop vilifying the banks? And I'm going to champion the banks on this one. Sure. Because the people, the home buyers that took out these loans, where is their responsibility? Yeah,
unfortunately, the last administration, what we just described it was a victims and villains mentality, right? So if you were a homeowner and you found yourself, in a loss situation where you chose not to make your payments or you couldn't make your payments, then the fault lied with the financial institutions. Naturally, it has a lot more to do with macroeconomic policies than it does whether or not, somebody charged you an extra half of a point 10 years earlier to originate a mortgage. Well,
it's an interesting development by the Supreme Court. Now, whilst you have you here, I want to get your outlook on the housing market, because home ownership in the U.S. hit a 50-year low last year. Fewer people are buying homes. Are we seeing a reversal in that trend?
Well, there's a lot going on in the housing market. Obviously, it's a local market. What I think you're seeing now is that, you have 2 issues really going on. You have lenders that are terrified to lend to risky borrowers for the reasons that you just mentioned, because in the event that they do default, then the blame generally falls on the shoulders of the lending institutions. Now, that's difficult because right now, the people who are most affected by that are the low to moderate income and the minorities. So you're seeing the average homeowner right now, a first-time home buyer in the United States, is 75% of them are white when they're making over $90,000 a year. Well, that means that everybody else is missing out on the wealth creation opportunity associated with home ownership. And the big issue happening right now, besides the tight credit, is inventory is anemic. I mean, it was low last year. It's 10% lower than it was that time. So while you're seeing existing home sales pick up, you're going to run out of inventory. I mean, there's a lot of reasons why people haven't put their homes on the market. And until you find a way to incent builders and take the regulatory morass off their shoulders to start building starter homes, you're going to run into a buzzsaw.
We're going to have to get into this another time. We're out of time for now, but Tim, Rood, thank you so much.